The second in line are acquisition costs. So acquisition costs are basically your what you're going to pay to a lawyer or a solicitor or an attorney to actually settle the block of land for you, or a conveyancer, for example. You need those are your legal costs. And what are you buying the property for? And the third thing is, and it is known as a different. It will probably have a different name depending on which part of the world you're from. So in Australia, and if you look at Australia, UK, South Africa, and so on, they're all known as everything is known as stamp duty. And what that is a stamp duty is an ad valorem tax. And what is it? Is that it's off the levying tax or custom duties. These are proportionate to the estimated value of the goods transacted concerned. So that's just a definition I got off the internet. But what it is that, so let's say you're buying buying a block of land for $1 million, or any property for that matter. If you're buying it for $1 million, and if it does have stamp duty, it's usually a percentage of that amount on top of the sale value. So if we go here, if we go back here, and let's zoom that in a bit more so we can focus just on the acquisition cost, or this section right here. So if I'm buying something for, let's say $1,050,000, and I can put in, whoops, not 10 million, just $1,050,000, one more zero. So I'm buying something for $1,050,000, and there's a stamp duty or an ad valorem tax, which is in Victoria, where I'm from, it's 5.5%. It could be a different value or a different percentage in your part of the world. If that doesn't apply to you, you don't have to worry about it. Just press 0, and nothing would be applied to nothing would be added to the value of the land over there. But these are the costs. The acquisition costs are the costs that you can claim as part of the cost of the land when you are purchasing, because they are different. When it comes to accounting terms, they become different. So I mean, even setting up a different trust or a separate company that is going to hold the land for you is also a land acquisition cost. However, that cannot be claimed as part of the cost of the land. But these three things, the legals that you spend on that. So say, for example, I hire a conveyancer. A conveyancer is another term, also again used in the UK, New Zealand, Australia, and South Africa. Is a person trained to deal with all aspects of property law. So what they do is you sign a contract, and then you have a lawyer who coordinates with your bank and with the seller. And if there are other people involved, in the other authorities who might have a lien on the property, or who might have a mortgage on the property, or there could be some property taxes owed to a local government body. So those things get involved in there. So that's the person, that legal guy or the legal entity that is handling your transaction. Those are your legal costs. So say, for example, in Victoria, I can go 0.07 or 0.5% or something like that, is the value of of what I really need to pay here. Whoops, I forgot to add the percentage here. So if I add the percentage there, you'll see that, you know, my legal acquisition cost could be about $525. Or if you know that they are going to be a little bit more, I would just put in 1% maybe, or 0.1%, and I know that, you know, $1,050 will need to be paid to a conveyancer or a lawyer, and those are my costs. So if in your part of the world there is a stamp duty, put that in, and you know that will be added to the cost of the land over here. So that's pretty much it under acquisition costs. And this is not that difficult. So if you're planning to buy a block of land, and you know that this is what I'm going to get, so get the list price. So whatever the listing price is for that block of land, put that in there. Select whether or not GST is applicable to you, because if it's not, just like NA, and nothing will get calculated over here. If it does apply to you and it's a commercial property, which is usually applied on top of that, so it's gonna, if you select yes over there, it is actually going to add that over here. Now, as soon as I select GST, I get a section which says checked, and all it is trying to do is trying to figure out whether or not I have a margin scheme that applies to me. Now, this is only applicable to people from Australia. I'm not sure if this applies in New Zealand, but what it is that there's a margin scheme, and this video doesn't, the course doesn't, the scope of this course does not actually include me trying to explain you what margin scheme is, but you've got to put that in. If it's a commercial property, because it doesn't apply, that's why it gives you a check over here saying, hey, check this out, because that doesn't apply. So if you select no over there, that check's going to disappear. But anytime you're doing a feasibility on something and you select yes, when I buy this property, GST applies, it is going to warn you to do a check on the margin scheme. So that's how these things are related. So when you're entering the value, so if it's a residential block of land, there's no GST applicable on buying residential, especially when buying. So this is the GST that you can claim on an expense. So if it doesn't apply to you, don't worry about it, just skip on it. Don't worry about what it says about check or any of that, and keep moving on. And that's pretty much it on the acquisition cost, and I'll see you in the next video.